Welcome to Trader TV, your insight into trading for professional investors. I'm Dan Barnes. Trading desks are evolving at an astonishing pace across asset classes, and new research by Coalition Greenwich and the London Stock Exchange Group is showing us exactly how they're changing and what that means for traders. Joining me today are Quentin Limouzi of LSEG and Kevin McPartland of Coalition Greenwich, and we're going to be discussing the research and what that tells us about trading going forwards. Kevin, Quentin, welcome to the show.
Thanks for having me.
Thanks, Dan. Great to be here.
What are the dynamics that traders are battling against in order to manage trading today?
So we conducted research, Coalition Greenwich and Refinitiv. We went out to almost 250 market participants around the world. We split those respondents between equities, fixed income, and FX, so we could understand the different dynamics in each of those markets, obviously very different markets in some cases. So some of the key findings, automation remains key, right? We've seen a shift over the last 5 or so years from a big focus purely on electronic trading, right? That point of trade, to more of a full end-to-end workflow, right? Including pre-trade, post-trade, risk compliance, all big themes there. Another big one, cloud computing, right? 92% of those respondents are on a journey towards greater adoption of cloud computing at some stage in that journey, right? Some fully there, some just getting going. One other interesting finding, and in some ways flies in the face of a lot of this sort of innovation and process forward that we've seen, is email. Email is still a sort of a widely used tool for communication amongst capital markets professionals. To some level, we obviously see that changing, whether it be for compliance reasons or just for efficiency. But we thought that was an interesting little nugget that we found sort of buried there in the data.
So Quentin, that's really interesting. We've heard from Kevin about what the researchers found. How would you describe the dynamics that your clients are trying to manage on trading desks today with those innovations?
We've seen pretty much the same as Kevin was discussing throughout the survey. If I was to summarize it under, one umbrella, I would call it productivity, right? So when it comes to cost pressure, when it comes to automation, even moving from one tech stack to another, productivity is at the heart of what we're trying to do. And really what we're trying to do here is more with less. It's nothing new, but it continues on the trend of cost pressure, doing more with less people. So trading desks constantly evolve, in my mind, from being highly skilled operators, morphing into engineers, planning, automating the workflow, the chain, allowing to concentrate on high-risk trades and alpha generation.
So Kevin, looking at those dynamics in turn in terms of time and cost and limited resources, how is technology being employed to help manage those?
So a big part of the picture here is data. Data is useful obviously for those trading analytics, but also it's a big part of automation, right? You can't automate a process if the systems that you put in place don't have access to data to decide what they should do next. Another big theme that has come up over the last few years is integration, right? There are very few trading desks, if any, that use a single piece of technology anymore, right? You're using a variety of systems, usually from a variety of providers, and they all need to talk with one another, right? If an order comes in from a client on screen 1, you need to be able to click it and have it stage the order in screen 2, and then go down perhaps to an exchange on screen 3, and that should be seamless. Cutting and pasting doesn't work anymore. There's a number of facets at play here. Some of it, the industry's made a lot of progress. In other parts, there's just a human component that continues to be difficult to automate and make near perfect, but we're certainly getting a lot closer.
There is data. There's also the mechanics, right? Your portfolio, your order, your execution management systems need to have multi-asset class capabilities. You need to have very strong connectivity to as many liquidity venues as you can find. I would say also derive data and everything that you do with that data to achieve the trading desk goals, produce meaningful pre- and at-trade analytics to feed your automation tools and your trading workflow properly during the day. So, we're really well placed at London Stock Exchange Group to offer this to our clients. We have the analytics platform, Trade Performance Analytics, that gives us real-time analytics and pre-trade across asset classes. We're very strong in the portfolio order and execution management system. You would have seen in the press that we agreed to acquire Tora, and we're expecting to close later this year, subject to regulatory approval. Tora will strengthen our multi-asset at-trade capabilities, our automation toolkit, and our footprint in Asia. So we're very excited about this.
Kevin, turning to you, what effects do these innovations and changes that you've reported on in the research make to the skills needed on a trading desk today?
As part of the study, we asked that question, right? What are some of those important skills trading desks are looking for in the next 1 to 3 years? Number one answer, data science, data analysis, right? Understanding how to work with data, how to manipulate data. If we dig a little bit deeper, right, we actually see a little bit more of that on the fixed income side than we do in equities and FX. Sometimes, right, more complex products, understanding bonds and the derivatives that sort of fall in that world. It's also a market that is earlier in its evolution of automation, right? So there's a lot of work equities and FX markets have already sorted. There's been a lot of talk over the last few years about traders who code, certainly going on. Interesting, though, we did ask that question as well about coding as a skill. It's on the list, but a good ways down the list compared to that data skill. So, thinking about a head trader sitting there writing Python code during the day, not that common, but even those head traders still very much need to understand how Python can be used and how to look through data. And that seems to be the real trend here.
That is really interesting. Quentin, can I ask you, how do those changing skill sets manifest in terms of your interactions with clients and what your clients are trying to achieve?
We work a lot more together in order to, come up with the analytics and the data the clients are trying to get to. We work with them in explaining the models. We work with them in offering the tools for them to change the models to what they need. I think we still need the traders to be fast thinkers, understand the markets, especially when it comes to, more complex asset classes or less liquid products, and have the ability to work under pressure. That's not going away.
Yeah.
You will always have, tail risks. However, orders are just too plentiful in any trader blotter today to just be reacting. So understanding, deriving, analyzing the data to better the processes and workflow is the name of the game, in my opinion, and that's not going away.
We've talked a lot then about data and the skills needed to manage data. How do you see the use of qualitative versus quantitative information changing in terms of the volumes and the way it's being used?
I think quality comes with deriving the right quantity, if you see what I mean. So, you will have qualitative data points that you can use to trade better that will be coming from a quantity of different data sources. Volume traded in the markets may have been an indication of liquidity in the past.
Yeah.
I don't think it's a good indication of liquidity. It's a good indication that there's a lot of trading being done. However, if you look into depth, if you look into the tick by tick data, and if you look closer into that quantity of data, it will result in better data points in order to make decisions based on liquidity, for example.
That's been great. Kevin, Quentin, thank you so much.
Thank you, Dan.
Thanks for having me.
I'd like to thank Quentin and Kevin for their insights today, and of course you for watching. To catch up on our other shows or to subscribe to our newsletter, go to tradertv.net.